This trade eventually reversed on me, but I still walked away with money in my pocket. And the reason wasn't prediction, it was good trade management. Today I'm going to break down exactly how managing partial profits and stop placement turned what could have been a full loss into money in my account. My name is Vi. I trade using market structure, supply demand, and price action analysis. I'm still on the journey towards consistent profitability, and every trade is a lesson in execution. If you're trying to build real skill and real discipline, then this breakdown will help. As always, this is for educational purposes and not financial advice. With that said, let's jump into the charts. So we are backtesting USD CAD here for September of 2025. On the 15-minute time frame, you can tell that the order flow is bearish. Our swing high is up here, and then our swing low is down here. Prices left a supply zone sitting in the premium section of the current leg, exactly where we would expect sellers to defend. We can see that before the 9:30 New York open, price comes back and mitigates the supply zone that we had marked up. This is my signal. When higher time frame supply is respected, I drop down to the lower time frame to look for confirmation. Here on the 1 minute, I identify a demand zone, an area where buyers previously pushed aggressively higher. I can see one right here, this sell to buy candle that created a lot of displacement. Now the question is simple. Can sellers overrun this area? If they do, that confirms control of short-term order flow. And that's exactly what happens. We can see that demand fails and supply takes control, leaving clear displacement and fair value gaps here. Now I need a structure for an entry. Jumping to the 5 minute, I can see this huge fair value gap that was created by the aggressive sell-off. That imbalance becomes my entry zone. An entry is placed at the fair value gap and stops are right above the recent highs. My risk is clearly defined. I already know where I'm paying myself. PT1 sits at a small candle cluster, which likely represents resting buy orders. PT2 sits a little deeper, but the same general liquidity pocket represented by a cluster of orders. Whatever position we have left can keep running until we take out this external low right here. This setup offers roughly 3R if fully delivered. So let's run the trade out and see what happens. A little after 9:30, price tags me in and immediately starts moving in my favor. We hit PT1 quickly, and that's my cue. I take partials and I move my stops lower so that I can remove some risk off the table. If we drop down to the 5 minute, we see why we don't want to go to break even just yet. There's a huge part of that fair value gap that remains unmitigated. And if price comes back to collect more sell orders before moving down, we don't want to get taken out of the trade unnecessarily. And so that's why I choose to put my stops somewhere in the middle of the fair value gap. We're heading into 10 a.m. news, so volatility can increase. So protecting capital is crucial. As price continues lower, we hit PT2, and this is my trigger to move my stops to break even and secure more partial profits. At this point, I have two options. I can leave my stops at break even, I can lock in more profit, moving my stop loss down further, and I can let the market decide what it wants to do. I'm personally very conservative when it comes to this, and here's why that matters. Price aggressively reverses from that key area of interest that we were looking at, where this cluster of orders resides, potentially representing resting buy orders. Price reverses and eventually I'm stopped out at break even, but I didn't lose any money. I had already paid myself twice. For me, this was a huge lesson because it separates gamblers from traders. You don't need every trade to be a home run. All you need is a defined bias, a structured entry, a clear risk plan, and the discipline to pay yourself when the market offers it. Because sometimes the market gives you profit and then it takes the rest back. Your job is to secure what's yours. This trade reinforced something really powerful for me. The real edge isn't prediction, it's protection. Managing partials turned a full loss scenario into a profitable day, and that's sustainable trading. If this breakdown helped you see trade management differently, check out this next video where I break down another backtesting exercise. And if you're on the path toward consistency, then subscribe. We're building this skill together, and I'll see you in the next video.